Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that trade chaos and tariff-war skirmishes have markets worldwide watching for inflation signals as much as growth signals. First in the US, their Red Book Retail Index was up 6.1% last week from the same week a year ago, driven increasingly by tariff tax price increases, which is why this metric is diverging so much from the formal retail sales volume data. And American mortgage applications fell last week from the prior week. That is consistent with the benchmark 30-year mortgage rate rising, now almost touching 7% again. And the Richmond Fed's regional factory survey came in negative again in May, with activity slowing and new order levels still quite weak. The service sector report for the same mid-Atlantic region was weaker too. In both cases, they recorded price pressures over 6%. And the Dallas Fed Services survey was just as negative, in fact even more so. Input prices are a real issue here too, over 5%. The well-supported US Treasury 5-year bond auction continued the trend of bidders wanting to get higher risk premiums. This one delivered a median yield of 4.01%, up from 3.93% at the prior equivalent event a month ago. And the minutes of the May 8th Fed meeting released overnight revealed policymakers are uncertain on how to assess the future risks of inflation and their labour market, and how they can meet their dual mandate when forces are pushing in different directions. They seem to see that the inflation risks are the key priority. They are also watching the US dollar depreciation because that too brings inflation risks. For them, it is a waiting game. And India's April industrial production expansion slowed in March, but not by as much as was expected. It seems to be settling in at an under 3% rate, which is far more modest than the overall economic expansion there. India's economic rise isn't really being built on manufacturing prowess. Of course, the trade and tariff war backdrop won't be helping. And euro area inflation expectations are rising again and came in at 3.1% in the latest survey for April for the ECB, results they won't have liked. These expectations are back to early 2024 levels, unwinding the progress the ECB policymakers thought they had won. In Australia, their monthly inflation indicator, also for April, shows it's stuck at 2.4%. A small easing was expected, but that didn't eventuate. But 2.4% isn't a killer level and probably won't change expectations that the RBA will keep reducing its cash rate target, currently at 3.85%, by another 25 basis points at their next meeting on July the 8th. A lot could change in between, however, and analysts will be watching for upside risks. The US Treasury 10-year yield is now at 4.48% and up 4 basis points from yesterday. And the price of gold will start today at $3,296 an ounce, down $6 from yesterday. But oil prices are up $1.50 at just on $62 a barrel in the US, while the international Brent price is now at $65 a barrel. And the Kiwi dollar is now at 59.6 US cents, a small 10 basis point rise from yesterday at this time. Against the Aussie, we're up 50 basis points at just under 92.8 Australian cents. Against the euro, we're up 30 basis points at 52.8 euro cents. That all means our trade weight index starts today at just under 67.9 and back up 30 basis points from yesterday. And the Bitcoin price starts today at $107,462 and down 2.6% from yesterday. Volatility over the past 24 hours has been modest though, at plus or minus 1.4%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.